Good afternoon and welcome to the Benchmark Holdings Q1 results to the end of December 2020. We are joined this afternoon by Trond Williksen, CEO, and Septima Maguire, CFO. We'll run you through the presentation first, and then there will be ample opportunity at the end for Q&A. You can submit these via the Q&A function, and I will read the questions out at the end. And so without further ado, over to you, Trond.
Thank you, and good to see you all, and welcome to our Q1 financial year 2021 presentation. I am Trond Williksen. I'm the CEO of Benchmark Holdings, and as usual, I bring with me our CFO, Septima Maguire, and we are going to give you insight into the financial and operational performance for our first quarter in this financial year, as well as update you on status and outlook for the group. So starting off with the highlights. I am very pleased to say that we have started the year on a positive note and very much in line with the expectations and ambitions we had for the quarter. We've had a quarter with good progress in all our business areas. It follows from this that we see a strong improvement year on year, also financially. Our revenues are up 18% from Q1 2020 to 29 million, while our adjusted EBITDA increased from 0.4 million in Q1 2020 to 3.0 million in Q1 this year. We are also ending the quarter with a strong balance sheet, strong liquidity, and cash reserves that allows us to execute our plans and ambitions going forward. We are satisfied with the progress we have made through the quarter in all three business areas. Our Advanced Nutrition business area have had a good quarter, where we have been able to improve our performance in slightly improved trading conditions, but in what still remains a challenging trading environment caused by a difficult shrimp market, oversupply of Artemia, and COVID. Genetics is continuing to perform well as a well-positioned genetics business with a stronghold in the salmon industry. Even if also the salmon industry has felt the heat of the COVID pandemic in the last months, our salmon genetics business is well positioned with their customers and represents a crucial starting point in a long production cycle that has not been affected by the more temporary challenges the industry has been undergoing. Operations and financial performance in our health business area is also in line with our expectations. The revenues in the quarter are driven by sales of salmon, which has been progressing well and according to what we expected in the quarter. Key focus has, of course, been to continue to deliver on our strategic initiatives. Our effort to launch BMK08 CleanTreat has, of course, been a key priority in order to get in the market with this transformational solution to the salmon industry. We still stick to our plan to launch in Q2 of this calendar year, given the progress we have seen in terms of both regulatory and commercial processes. We also stick to our plan, focusing for now on Norway, starting off with launching 2 systems at entry, then ramping up as the customer uptake of the solution develops. Also, on the genetics side, we have advanced in the quarter, both in terms of progress towards commercial launch of SPR shrimp and entry with salmon genetics in Chile. None of these 2 initiatives will have significant impact on our P&L for financial year 2021, but we are systematically working on these initiatives that will be important vectors to generate growth for the group in the years to come. One of the milestones we reached in Q1 was the first production of salmon eggs from our own facility in Chile. The development of land-based salmon as a future market segment for our genetics business has also further crystallized during the quarter. Our unique value proposition with genetics well fitted for land-based salmon production has enabled us to position with further significant new client wins during the quarter. The land-based salmon segment is still in an early stage of development, but we see it represent a potential for significant add-on to our salmon genetics business in the years to come. Q1 marks the first quarter post-restructuring of the group. It is fair to say that we are in the first stages of our efforts to streamline the group, but we are definitely on our way. And it is satisfactory to see that we are progressing, starting to see that the benefits of focus on our core business areas are starting to come through. We expect this to continue as we move forwards, not as giant leaps, but as incremental movements towards the better. And with these introductory words touching the highlights of the quarter, I now leave it up to our CFO, Septima Maguire, to take you through the details of our financial and operational performance of the quarter. So, floor is yours, Septima.
Thank you, Trond. If we can move to slide 4, thanks. As we started this financial year, we expressed a clear commitment to support the business in its organic growth, invest in new growth vectors, and also be ready for market recovery in our shrimp market, which has been heavily impacted by COVID. These have been the main focus of our activities in Q1 2021. As you can see, we've had a solid start to the financial year, resulting in us growing by 18% to £29 million. At a gross profit level, we've grown by £1.8 million, 14% versus last year. Group gross margin percentage contracted marginally from 52% to 51%, driven in the main by margin squeeze in nutrition. The increase in sales and good cost control has resulted in adjusted EBITDA growing to £3 million from 0.4 in the same quarter last year. We have ended the quarter with a solid balance sheet, supported by cash of £56.4 million, which translates to net debt of £51.9 million. As we've previously noted, we are still in a cash investment phase of the business, and this can be seen in the increase in net debt. This cash outflow has been driven by planned investment in capital projects and working capital in the period. And I'll discuss this further later in the presentation. Next slide, please. Genetics had a good start to the year with an overall increase in the volume of eggs sold to 77 million from 63 million last year. Our Salton facility, which continues to establish itself as a quality supplier for off-season eggs, drove the increase, while we saw lower volumes from Iceland into Scotland. This is something we had anticipated as Scotland increased production of eggs to meet local demand. There was also a drop in harvest income as the NOK per kilo sales price for salmon fell and the costs also increased against last year. As a result, our gross margin decreased marginally to 63%. At an adjusted EBITDA level, our genetics margin increased from 29% to 31%. This is in spite of a 0.6 million loss from the Norwegian joint venture due to the impact of biological challenges, which reduced yield at the site. During the quarter, we've been investing in a number of growth vectors, as noted in the full year presentation. Capital investment for the business area was £2 million. This investment was focused in the main on the capacity expansion in the incubation centre in Iceland, which will allow us to increase number and quality of eggs produced and meet demand, particularly in peak periods. In addition, it will also allow us to support the land-based salmon markets as they come online during the next decade. The capacity expansion at Fellsmere to expand our shrimp breeder capacity to 100,000 and support the commercial launch of the genetic shrimp programme, and the planned expansion of the Ensenada salmon egg facility in Chile. These investments all form an important part of the growth plans for the future in this business area. Next slide, please. Nutrition had a good quarter, whilst still trading through COVID-impacted markets. In a number of our markets, ponds are being stocked at a significantly reduced rate, with knock-on impact on demand for our products, and there does remain uncertainty in the market. Revenues grew by 32% in Q1 21, with growth in each of the product areas, Artemia, diets and health. Geographically, this was driven in Asia by restocking of distributors, whereas in Q1 2020, the distributors had started the year with very high inventory levels. This growth was offset in the Americas, which continued to be harder hit by COVID than other territories. And the European market, which is focused towards sea bass and sea bream, was in line with 2020. We previously highlighted that we had implemented a change in our Artemia pricing strategy in certain markets to support market share and position ourselves for a market recovery. This has resulted in volume growth in Artemia, which has driven absolute growth in the period, but impacted our gross margin percentage, which has dropped from 47% to 42% in the quarter. Revenue growth and ongoing cost control led to adjusted EBITDA growth of 1.3 million to 1 million, with margin increasing to 7% from last year. Investment in the nutrition business area of 1.4 million has been focused on health and safety in our manufacturing facility in Thailand through new fit-for-purpose fire suppression systems. Next slide, please. Sales of Salmosan, our existing sea lice treatment, were in line with last year and continue to provide a profit contribution towards the ongoing costs of the health business area. Health gross margins increased to 30% in the quarter versus 7% in last year. Last year's margin had been depressed due to abnormal air freight charges to Chile in the period. Now, our focus in this business area is on achieving the marketing authorization and launch readiness for BMK08 and CleanTreat. And we've commenced building the capabilities required to establish the support functions for the vessels and the use of the CleanTreat units. Capital investment of £0.8 million has been purely focused around the BMK08 and CleanTreat projects. If we move to the next slide, please. Our continued focus on cost throughout the first quarter resulted in reductions in operation and R&D costs for the group. However, we continue to invest in our key growth areas, and subsequently costs in health increased as we build our launch capabilities for BMK08 and CleanTreat. But in all other areas, we saw a reduction. In R&D, our focus is on key projects, BMK08, CleanTreat, our ongoing improvement of the breeding nucleus and genetics, and investment in nutrition projects. As you will recall, we committed to an annualised saving of £10 million for the business. This saving was made up of savings around the continued business and also the discontinuation of the loss-making vaccines business. During Q1, we achieved 1.8 million year-on-year cost saving from the continued business, and 2.1 million related to the vaccines, which has been moved into the discontinued business line in the income statement. We remain focused on delivering the remainder as we move through this financial year. Moving to slide 9. There was an overall cash outflow of 14.6 million for the group in Q1 2021. We had positive cash generated from operations of 2.3 million due to the improved trading, but this was offset by cash outflows, mainly in two areas. Firstly, the CapEx investment in our growth vectors, as noted earlier, which totaled £4.3 million. And secondly, by a £7.5 million outflow in working capital in the period. This significant investment in working capital was driven by the 1920 record Artemia harvest levels and the associated payments due under our Artemia supply agreements. These payments totaled £8 million in Q1 2021, in contrast with £4.5 million in Q1 2020. Whilst the run rate for CapEx will increase over the rest of the year, in line with the plan, as we ramp up the CleanTreat readiness and continue our genetics and nutrition investment projects to support our growth. The working capital movement will be lower. The next payment under the Artemia supply agreement, due in June, is expected to be significantly less than the Q1 amounts. I would also like to emphasise that we will not maintain the same rate of cash outflow for the remainder of the year. Cash management and adequate headroom remain a priority. Back to you, Trond.
Thank you, Septima. In short, we expect to continue to trade according to expectations, and our focus is very much on to stay on course and to drive performance as we move forward based on our plans and realistic aspirations. More specifically to the business areas. Financial performance in genetics is very much linked to the sale of eggs to the salmon industry. The way we are positioned and trade gives us a good visibility in this market, which again gives us reason to predict our trading as the year moves. There is still seasonality in this market, and Q2 is not a high season, without this affecting our performance in the financial year as a whole. In our advanced nutrition business, we expect to continue to trade resilient over the next quarters. This does not mean that we think that we are out of the woods in terms of the market turmoil that has affected this business area. The same issues that has made the market challenging is still with us. Turmoil in the shrimp markets made worse by COVID is still here. Our focus is to stay resilient, making any effort to make sure we optimize our performance, positioning for when the market is again normalizing, and the market will normalize. And of course, for our health business area, focus is on the commercial launch of BMK08 CleanTreat, which is subject to final regulatory approval, is on schedule to happen in Q2 in this calendar year. As I stated in my introduction, we have advanced in becoming a more streamlined group, and we can start to see this is coming true in our performance. To continue on this journey remains very much our focus. Key in our development will be to keep a strong financial position, enabling us to trade resilient through COVID, as well as selectively invest in our core business areas to drive growth for the future. Next slide, please. Benchmark is a very well-positioned company. I want everybody to know that. The most well-positioned company that I've been in, and I've been here in the industry for 30 years. And we are in an industry that poses a lot of opportunity for the future. We will stay disciplined, not becoming tempted to divert, and determined to deliver on our roadmap to profitability, which still remains unchanged from what we have been communicating before. Next slide. Eventually, this will lead us to what is our true objective, to become a streamlined, sustainably profitable group, the leading aquaculture biotechnology company. And with those words, I thank you for the attention, and we are now open for questions.
Thank you to both of you for that helpful presentation, and we do have some questions that have come in. Could you expand on why COVID is impacting the shrimp business? Nice and short and to the point to get started.
Yeah, okay, I can start doing that, in different ways, I think, but in the reason is that it impacts the consumption pattern. Shrimp has been consumed predominantly in HoReCa market, which has been impacted by the COVID pandemic. So when consumption is going down, that will have an effect of the stocking, because in the shrimp industry, it's a very short life cycle. It's a very short life cycle, in actually just some months. So when you see a decline in demand in the market due to, for instance, COVID, you will immediately see it in the stocking levels in the hatcheries and nursery, which are the key markets for us. And that disturbs, what is our market in the shrimp industry, the hatcheries and nurseries, which are stocking, not stocking, in order to adjust to the situation that is caused by COVID. So that's in short why it's so affected. So it's different from the salmon sector, because salmon sector has a much longer life cycle. So when you have disruption in the salmon sector, it takes a longer time before it really affects our genetics business, which we have in the salmon industry, So we haven't seen the same effects in the salmon industry that we have seen for advanced nutrition in the shrimp industry.
Okay, thank you, Trond. I should perhaps be pointing this gentleman towards our research, but maybe, Septima, if you'd be happy to give some guidance on where you think total sales might be in 5 years' time, and what are your larger, broader targets?
So in terms of breaking it down, if you look at the growth factors that we're focusing on at the moment, which are in the health business area, we're looking at CleanTreat and BMK08, which is due to launch in Q2 of this year. We have always guided that we see that the global peak sales of that will be 75 million, of which we expect that the Norwegian sales will be 50 million. And Norway is the first target market that we are launching, and we're well progressed on getting the marketing authorization from the Norwegian Medicines Agency. Then in terms of our nutrition, we expect to see growth within the nutrition in line with market growth, which is generally sort of 5%. After normalization of the COVID impact is probably the best way to start and consider on that. And then in terms of genetics, we've seen good, very strong growth in our genetics part of the business. And we will expect to see step up growth coming from our Chilean facility, which is coming online this year. And we had our first production at the end of, at the start of Q2 financial year. And it's got capacity for up to 50 million, yes, 50 million salmon eggs. And also then we'll see step up growth coming from the launch of the SPR shrimp, where we've guided that the peak sales will be 25 million, but that it's a long investment in terms of the growth of it is going to take a longer period of time as we increase capacity to then take more market and increase capacity. So 5 years from now, there's a lot of positive growth factors that are in play at the moment that we're focusing on to get that 5-year outlook to be worth everybody's while.
A lot of moving parts there to give you opportunity. A brief follow-up question on the shrimp demand, please, Trond. And I guess the question is, why has the shrimp demand been impacted by COVID, but meat and salmon have not?
Shrimp industry or the shrimp life cycle production cycle is much shorter than the production cycle of salmon. So it takes much longer time from an impact in the market. It really impacts the starting point. And we are both within the shrimp industry, where we are providing solutions for advanced nutrition. We are in the hatcheries, nurseries, the very early stages of production. So when you have an impact in the market, it really goes very quickly back to the early stages of production. But in the salmon sector, it's a much longer production cycle, so it takes much longer before it has the same impact in the starting point. It should be also added that I come from the salmon industry, but the salmon industry is probably more resilient in the way that it's set up. It's more robust also, so it takes those bumps in the road in a different way than you see in the shrimp industry. So you have inherently more impact in the shrimp industry that you will see in a more developed salmon industry.
You also have to consider the end market consumption patterns. The end market consumption patterns of salmon are through the retail channel, which has not actually experienced a significant impact, whereas the shrimp channels have historically been through the hotels and catering. And so the resilience of salmon is built as well on the lack of impact on that end market demand.
We're all looking forward to getting back out to those hotels in due course. So now let us look forward to Q2 and CleanTreat. Are you seeing an increase in client ordering as launch approaches?
We have seen interest for the solution for a long time, and so we've seen that firm interest from the market on the solution. The toolbox to handle sea lice is limited, and there is a need for a new solution. We're coming in with a transformational solution to the industry. So we've seen that the industry has been interested in that all the way, and that's still the picture. That's still the picture, and we are of course engaging more into commercial discussions now when we are entering, getting closer to the launch as natural is. But this has been a constant, I would say, over a time. But firm interest, yes.
Excellent. And one perhaps now for you, Septima. Regarding nutrition, the reduction in gross margin is fairly significant. And so do you expect this to be on an ongoing trend? And what should we expect to see in the mid to long term?
So that's a really excellent question. The reduction in margin is from one of our product areas, Artemia. And we purposely engaged in a pricing strategy to try and hold market share and then also be ready to regain additional market as the markets come out of COVID. At the moment, there is an oversupply of Artemia in the market, and that drives it's slightly more commoditized pricing. As time passes, the oversupply will be consumed, and we move back into more normalized supply. But it is about us ensuring that we hit the right price point, and that we work with our customers to make sure that the value proposition of Artemia remains something that's really, they're excited by, they want to use. So in the short term and even into the medium term, as we sit with an oversupply of Artemia, that margin reductions will be part of the profile of the group. But it is about making sure that we achieve the right level of volumes, that we hold market share, and that we can actually help grow the market through improving the shrimp farmers' operational efficiency, and then help them get more out of their feed products for their shrimp.
Okay, we've got another couple of questions here. I think sort of wrap into one more general look at competitors and acquisition opportunities, because the uncertainty within the market, you would imagine, might have thrown up some opportunities that you could take advantage of. But perhaps at the same time, you've seen competitors trying to achieve the same technological developments that you have been striving to. So perhaps you could give us a little bit of insight there, Trond, whether there's things you can capitalize on or risks that you are trying to mitigate.
Yeah, it depends on which area. We have 3 business areas, and there are different competitors in the 3 business areas. I think when it comes to our health division and what we are proposing now to the market as a solution for sea lice treatment, I think we have a very unique position. There will be competitors there also along the way, but I think the transformational solution that we are bringing to the market now gives us some room to maneuver, also competitive wise on that area. If you go into the genetics area, well, there are a few players within that area. Within the salmon, we are one out of two big players. There are three or four if you add one integrated player. I think we have a very strong competitive position there, and that we intend to develop as we move forward. You know, we don't take it for granted that everybody is sitting still around us. You know, we are constantly moving and developing our value proposition, and that is definitely what's going on every day within the genetics area. And I'm quite confident, based on the position that we've been able to develop there over time, that we will keep a strong position going forward, and we will not fall asleep at work, I can promise you. When it comes to advanced nutrition, we are a highly specialized nutrition provider, and we will stay that way. We will stay that way. We are targeting developing high value solutions, specialized solutions, targeting high value segments of the market. Yes, there are competition within that area, and I expect that competition will be constant, or could be even developing to more competition over time. Our focus is to make sure that we are on top of things, and that make sure that we have an organization that takes the opportunities, developing new solutions, developing new proposition to the market, ensuring that we keep our position. And I think we have a unique position within advanced nutrition as a specialized provider. So I'm not too afraid of that. We are not going to be tempted to divert into other segments, more generic segments, more high volume, lower margin segments, because we don't have an infrastructure to support that. So we will keep discipline and focus, and that's the key for us moving forward.
Lovely. Well, thank you very much to you both, and good luck for the next 3 months, where I'm sure we shall hear back from you following on your half-year results.
Wonderful. Thank you.
Thank you very much.